Welcome to the new weekly outlook, everybody. So we're going to start off with two articles that I want to go over. So we're going to start off with the fundamentals first, then we're going to move on to the economic calendar, and then we're going to move on to the technical side, looking at gold, GBP, JPY, and US30. So let's go ahead and get started. We're going to start off with some UK news. So this is for Brexit. So last week, just to give you guys a real quick recap, we were talking about how EU said that they were going to take some legal actions against the UK if the UK were to pass this bill that they were talking about, this legislation that they were talking about, which overrides parts of the Brexit deal that the two parties pretty much came together and agreed on. So if you continue down into this article here, then you will see exactly what this bill aims to do. What are some parts that they're going to be overriding when it comes to Northern Ireland. So that's what the EU said. They were going to take some legal actions against the UK. And we saw the sentiment being continued and furthered along by Boris Johnson that they were going to continue moving with this bill, that they're going to continue working on it. They're going to continue voting on it and everything like that. Like they were going to continue pushing with this bill, regardless of whatever the EU said. And so now it seems like on today we're supposed to get some updates on this, which we did. So it seems like they have unveiled the legislation to override parts of the Brexit deal that the UK signed with the European Union. And now this is risking a trade war with the bloc. So this is all pretty much now leading up to this point, it was all market sentiment. Now we're sitting at this point of where there's decisions being made. And so now we're moving from the market sentiment of, what can happen. Are they really going to move forward with the legislation? Are they not going to move forward with the legislation? How is the EU going to react to it and all of that? Now we're moving from that sentiment and that uncertainty more towards the decision making. And we're actually seeing the decisions being made. So what we're starting to see is the EU also stepping up, and they're saying that, hey, if you're going to continue doing this, then we are going to take legal action. And that the bill here, for example, the German chancellor said the bill is very regrettable, and the EU will respond with unity. So we are seeing that there are more tensions rising between the UK and the EU. There's potential EU retaliation going on as well. And now, of course, we have President Joe Biden, who stepped in earlier when the discussions were going on, even during Brexit times, and they were saying that the Biden administration was going to support the EU in this case, and they were going to, if need be, then they'd be coming in and supporting the EU in whatever ways that they would, require the support in. So we are starting to see the tensions pretty much rising, and now again we're moving from just purely market sentiment, now decisions being made. So again, there is still this aspect of market sentiment. As the fundamentals are coming out, the market is reacting to the fundamentals, and they are anticipating pretty much, what can we expect to see? And that's where this uncertainty is starting to step in a bit more. As you continue down, we're starting to see that the government wants to push the bill through the UK's lower house of commons before the parliament breaks at the end of July. So although it's unlikely to become a law for at least a year because of the expected opposition in the upper chamber. So it's pretty much Boris Johnson, and he's also getting this pushback from people in his own party, from people in UK who also think that this bill is probably not the best way to move forward, because it will increase tension between the UK and the EU further, which is not good for either of the economies, right? And then of course you have Northern Ireland, which kind of wants to have its own say as well, right? What's pretty much going on with them, since this entire Brexit deal and this bill takes Northern Ireland into consideration, and it's about the Northern Ireland, of course, right? So we have this pretty much tension building when it comes to the UK, when it comes to the EU, when it comes to post-Brexit discussions and what's pretty much going on there. So you have that in the markets at the moment. And then when we're looking at the US, the Fed, the interest rate hikes, which we are expecting to come out on Wednesday. So far, the sentiment here has been that we're going to see about half basis point hikes in June and in July. In September, we're going to calm down a little bit. That's the sentiment that has been put out so far. But in the last couple of weeks, we saw consumer prices coming out. So this is your CPI, this is your PCE, right? We also had NFP coming out. We also had inflation expectations and everything coming out, showing us that inflation is still very high. And that when you look at the NFP data, it's pretty much supporting this decision of the Fed to continue increasing interest rates. So far, because of the high inflation and what we're really expecting, it seems like there is the sentiment that we can have 75 basis point increase on the table. That could be a discussion for Wednesday. And if they do end up increasing the interest rates by 75 basis point increase, then that pretty much brings into another factor into consideration, which is, can we move into what they're, a lot of people are fearing as a recession at the moment? How are the consumers going to react to it? How are the investors going to react to it? Do we have enough economic data and activity to continue supporting a 75 point increase? Or yes, the inflation is super high and you increase by 75 basis point, then how is the economy going to react to that, right? Are the consumers going to become super conservative, and are we going to roll back into some form of recession, where right now the focus is being shifted from just increasing interest rates to more like monetary policies? Should we move towards a contractionary monetary policy, or maintain a little bit of an easy monetary policy but continue increasing interest rates? So now all those things are coming into discussions, right? Coming into light. So far, as soon as this article pretty much came out, we saw that in New York session, and even yesterday, as soon as the Asian session opened up, there was a hard sell-off, right, on a lot of the assets across the board. If you're looking at crypto, if you're looking at US30, anything like that, we saw a hard sell-off. And that's because, again, this is all market sentiment leading up to Wednesday, when the actual decision is going to be put out. It's going to be released. Are we going to see a half basis point hike, or are we going to see a 75 basis point hike, right? And what does that essentially mean for the economy? So again, the sentiment so far was a 50 basis point hike. So obviously when you get the news of a 75 basis point hike, that does bring in a little bit of more uncertainty into the markets as of right now. So all of this is, again, because of consumers, price increase, CPI inflation, all of that stuff. And then also you have any labor market data that's coming out that's also supporting this decision, that it's for sure we're going to see an interest rate hike. Now the decision is it going to be a half basis point hike, or is it going to be a 75 basis point hike? So those are the two articles I wanted to go over. And you guys can go back and look up the titles and, kind of read through them yourselves, but I want to give you guys a quick summary. Now, looking at the economic data, we started off quite easy yesterday, not too much coming out when it comes to high impact or anything like that, but even the low impact kind of gives you a good understanding of what the economic health is like at the moment. And then going into today, again, not much coming out in the US session, not much coming out in London session, nothing like that. Even in Asian, there's really not much coming out until the industrial production. That's for JPY. And then in pre-London sessions, when a little bit more data is starting to come out, if you're trading GBP pairs, you want to be keeping your eyes on the average earning index, and then also the claimant count change. This is with the people claiming unemployment related benefits during the previous month. So obviously you want to see this number decrease. So, from 56 to, we're expecting -40, which is a good thing. You want to see progress like that, because that tells you that there are less and less people who are filing for unemployment. That means, there needs to be less quantitative easing. The government doesn't really need to support as many people when it comes to the financial aspect and everything like that. You also want the unemployment rate to continue dropping. So these two kind of go together if you're trying to understand the labor market aspect of the economy, and which is very important because that's the dual mandate of any central bank. So labor market, unemployment, and then also inflation. And then going into tomorrow, you have PPI data coming out in the US session, and then core PPI. So this is something that I want to be looking at as well, especially going into Wednesday when interest rates come out, because this gives you inflation from the producer's perspective. So CPI is very important because the consumer is a core of the economy. But if PPI continues to increase as we're expecting, that means that there are costs that the producers are eating up that have not been passed down to the consumers just yet. So when producers are eating up costs, eventually they're going to, through the cycle, they're going to be passing down these costs onto the consumers as well. So that's going to be something important to watch. I do believe that's going to bring in a little bit more volume in New York session tomorrow. Leading up until Wednesday, if you're trading any pair, just understand any pair when it comes to GBP, JPY, when it comes to US30, when it comes to gold, any US pair, just understand that a lot of this is market sentiment. Are we going to see a half basis point hike, 75 basis point hike? What's the economic outlook going to look like? So all of that stuff. And then also you can pay a little bit more attention to economic optimism as well. Are we sitting at good numbers? Are we starting to get a little bit more optimistic, or is the number starting to drop down here as well? Other than that, you have an easy rest of the New York session tomorrow, and then going into Asian, you have a couple of news coming out, but it's not really affecting JPY pairs, odd pairs, anything like that. And then after that, pre-London session is quite easy. London session is quite easy, and the focus here really is going to be on the interest rates that come out. So yes, you have retail sales coming out and all of that, and I do expect that to probably have an impact, you know, in the 15-minute, 30-minute time frames, but nothing too long. If anything, the market could consolidate a little bit and show you a little bit of volatility with wakeouts and everything like that. But I do think the market's going to be pretty much getting ready for interest rates. So here again, we are expecting a half basis point hike, but the 75 basis point hike discussion can be on the table. So this is what we want to be paying attention to. As soon as this comes out, I do expect a lot of volatility in the market. And then also the press conference, that's going to be very important as well, because that's really going to push price in one direction or another. So I think that's going to be really the highlight when it comes to the New York session on Wednesday. And then the following day, so yes, you have a little bit of more, you know, red folders here. If you're trading the Australian dollar, pay attention to unemployment change, employment change, all of that. But going into pre-New York session into London session, you have GBP interest rates coming out. So same thing, we're expecting a quarter basis point hike here, but pretty much the same discussion. Is the economic data there to support this? As of right now, it's really not, because we are starting to see how the UK economy, last time when we saw an interest rate hike, we saw how the pound reacted to that, because when you're looking at the cost of living, when you're looking at inflation, now you have the post-Brexit tensions that are going on. When you look at the whole picture of the UK, you really don't have the economy to support another interest rate hike and continue pushing it. So yes, you know, can we see another, for example, half basis point hike, or are we going to stay at a quarter basis point hike, or are we just going to end up maintaining this for the next couple of months until the economic aspect of it kind of gets better? And then we end off a little bit easy. So then you have Bank of Japan's press conference here. You have the interest rates coming out as well on Thursday, but I don't expect the markets to go crazy as the US interest rates or as the UK interest rates. So that's something to watch out for in Asian session. And then we kind of just end off quite easy. Really the last news for Friday is going to be Powell speaking. And he's due to deliver welcoming remarks, things like that. So again, I don't really expect the market to react too heavily either, but I think the two important days are going to be Wednesday and Thursday this week. If you're looking for any trades in London session, in New York session, in Asian session, you can take a look at Bank of interest rates or interest rates for Bank of Japan. But the sentiment is already there that we are going to continue to see accommodative policies. We are going to see the interest rates remaining at a negative 0.1%. Nothing has really changed. Where the rest of the world is increasing interest rates, Bank of Japan is really not doing much. Now let's go ahead and take a look at gold. So now let's go ahead and move on to the technical side. We're going to start off with the monthly time frame here first. Some levels I'm going to mark off are going to be, the first one's going to be here. This is going to be your 17, let's just say 70 area flat. The reason why is because you have all this resistance here from that 2011 until 2012, and then we finally saw a sell-off from there. So for a very long time, we just consolidated out here. We finally broke above that in 2020 with COVID, and then we came back, consolidated into these areas. If you want, you can also create a zone here, right into this level, right about here, where you can see every time price taps into it, there's some sort of volume that follows, right? So that's one area that I'm going to mark off. Another one is going to be this 1900 area. Oh, I think it's a little bit lower, right around here. There you go. So 1900. After 1900 is broken, then we can target 1934 and then these highs up here. But for the most part, this is where I'm interested. This is where I want to see what is price pretty much doing. And then I'm going to narrow in my zone a bit more right here where you have that resistance. And then when I zoom in, you can see how this is all consolidation and finally break above it. Last month, we closed rejecting this. This month, we already made a top wick and we're starting to push right back down. So these are going to be the levels I'm going to mark off here on the monthly time frame. This is what I'm pretty much targeting. Go down to the weekly and zoom in here a little bit for you guys. So even here on the weekly time frame, we've had nice sell-offs from these all-time highs. came back here, grabbed some liquidity, a nice volume push up where we came back into this 1900 area where you can see price, closing candles, consolidation, wick rejections, and everything like that. And then a hard sell off right back into the zone, right? And then we stayed into this zone for almost half of 2021 until we got the Russia, Ukraine, all that tensions going on, and then finally push right back up into these previous highs, and then another hard sell off from there, coming right back into the zone here again. You got a nice little corrective move for a couple of weeks, correcting this bearish sell-off. This week, we already broke the low, so we know for a fact that we are going to continue pushing down. We just need the continued fundamentals for this. So let's say we do see an interest rate hike going into Wednesday for the US, there's a very high chance that we could continue the sentiment and at least come back down into these areas. And then we could see another bounce off here. And I do believe that gold is going to show you guys a lot of volatility right when the interest rates come out. But if it does increase to 75 basis point hike, then I am expecting a lot more volatility than just a half basis point hike here. Go on to the daily time frame. You can narrow in your zones a bit more if you wanted to. So for example, I'm going to remove this because we already saw what that level was on the higher time frames. But if I were to make this a little bit thinner, it would be right around here. So this is what I'm interested in because this was your consolidation support. So if last daily candle closed with no bottom wick, and so if the current daily just simply bounces off of this low right here and pushes back up, this could be our range for the next couple of days until interest rates come out, and then finally we find a direction in one way or another. So if you want to narrow in your zone even more, you want to figure out, where are your buy opportunities or your sell opportunities. I don't really see any sells until price breaks below this and then continues pushing down. So this is your 1810 area, I would say, right about there. And then you can target some of these lows here. So the first one is going to be as soon as price breaks its own daily low and continues pushing, you can target about 225 pips, which is coming down and filling this wick. And then after that, it's a clean sell coming down to 1770 flat. So you could look for a couple of scale ins there. You can look for a couple of scalps, day trades, and everything like that. Anything in between, that's simply going to be a scalp opportunity. That's not a scalp to swing opportunity there. Your scalp to swings are going to be as soon as price breaks below 1810. If you're looking for a buy, then wait for price to break above this zone and continue pushing. So target around 1840 area. You want price to come back above 1840, and then you can target some of these minor areas, starting off with a quick scalp for about, let's say 100, scalp to day trade for about 155 pips, and then turn that into a swing trade for about 300 pips or more. You could easily end up getting 100 pips or more on gold when interest rates come out. So that's another incentive to be patient. You come onto the 4-hour time frame, you can see how there's been a massive sell-off, and we're seeing price kind of reject off of this area. The current 4 hours almost like a doji. So if possible, kind of just wait, be patient, and just let the trades kind of set up for you. If the 4 hours like a doji here, there's really no direction. I wouldn't even drop down to any of the lower time frames. If you really want to look for a scalp, then you have to understand the multiple time frame confluence here. So if you're looking for a potential scalp opportunity, this is what I would do on the hourly. I would mark off this little support, right? And then this was also where price rejected previously. Now, I know that this is going to be my range. So if I'm looking for any sells, I want price to break below this and hold on to a clear resistance and then continue selling off. So that means when I drop down to the 30-minute time frame, I need a 30-minute candle close down here. The next one to give you a top wick rejection and then continue pushing down. That's an impulse trade, right? And your stop loss is going to be somewhere up top here. If you don't get a candle close here and it rejects and closes back here, and that's what the next couple of candles do not take a trade opportunity because the price is just going to end up consolidating. Now let's go ahead and move on to GJ here. So on the monthly time frame, going to mark off this top wick rejection right here. So let's say 168,400. And then also going to mark off the support. So this current candle is bullish at the moment. This kind of a support that price is holding onto. If price breaks below, let's say this 162 area, then I know that this monthly candle is also going to be bearish and it's going to continue pushing down. Once it starts pushing down, where is it headed next? The next major level is right about here. So these are going to be my 3 levels I'm going to mark off. And let's say this is going to be your 156 area, 156.1 area, anything like that. So these are going to be my three levels. As long as price is above 162, I can potentially look for buy opportunities as price continues pushing. If I'm looking for sells, I need this monthly candle to flip below 162, and then I can look for sells. If you really want to narrow in your zone a bit more here, what I would do is mark off this resistance right about here. So I know that in between this is kind of a minor resistance. Price is probably going to end up consolidating here, messy price action. But if price breaks above this, I know that it's going to be breaking the previous monthly highs, and I can look for clean buy opportunities going up to around 168,400 area. And then if price rejects that and flips back down, and then I know that I can look for this entire wick fill here on the monthly time frame. You go down to the weekly time frame. And here we see that there's been a nice bullish push up. So there's been, so far since 2020, price has been in a bullish structure. So right around here, a bullish structure. We got a nice consolidation here. Finally, when price broke out of consolidation, we came back, rejected right into these areas, and then continued pushing back up to tap into those all-time highs. We were unable to close at that 168,400 area. We came back and respected a resistance level here. This week, we're breaking the lows. So again, 162, as soon as that's broken, the monthly candle flips. That means I can look for sells coming down. If price flips and continues back up bullish, then I know that I can look for trade opportunities going up to 168,400. So that's kind of my reference right here, right? Drop down to the daily time frame. So I've seen how price kind of rejects into these areas a couple of times. We've had price kind of showing us some form of exhaustion here on the daily time frame, and then we got a nice volume after breaking the lows, grab some liquidity, nice volume to the upside going up to 168,400. So anything in between, I can look for scalp opportunities, potentially day trade opportunities, but that's about it for about 100 pips, right? But if I want to look for scalp to swings, then I need 162 to be broken and price continues pushing down, or price breaks above, let's say this 163,500, 164 area, and then continues pushing back up bullish. I don't want to be looking for a trade in the zone. Drop down to the 4-hour time frame, and we see how there's been messy price action right here, right? And then that's a fake out, and then again consolidation into these areas. So I don't want to be looking for, you know, trade opportunities in that zone itself, but anything in between is just going to be quick scalps or even day trade opportunities. That's about it. Here, what I want to see in the next couple of 4-hour candles is a 4-hour candle closing below this, bullish. If this candle closes like this, amazing. The next one makes a top wick and continues pushing down. We can at least come back down and target into this area right about here, and then continue pushing down from there, right? 162, the monthly candle flips. You have confirmation from the weekly, from the daily, even on the 4-hour. But if you're looking for a scalp opportunity, let's say in Asian or going into London, you need this little low here to be broken and price continues pushing down. I would want to see a break and retest here. That's going to give me a further confirmation of continued sells. But if this candle just closes like this, or even like a doji, or like, you know, showing me something that's very weak volume, then I want to see this low here being broken and then price continuing to push down. All right, and then let's look at US30 here. So we're going to mark off this support for consolidation, which is your, let's say 33,800 area. And then after that, we're going to mark off this resistance right here that we're pretty much tapping into at the moment, so which is your 3,600. And then after that, if price continues pushing down, then we can come back and target this 28,600 area here flat. So these are my 3 levels here based off of the monthly time frame. So we've had a hard sell-off after price consolidated, making those all-time highs, and then coming back and filling the previous month wick here, also breaking the lows. So that gives me confidence that we're going to continue pushing down. What I do want to see here, though, is some corrective moves because we've been in a hard sell-off for the last couple of months. So I do want to see if price is going to come back and tap into these areas and potentially give us some wick rejections and everything like that this month. We drop down to the weekly time frame. So when we look at the weekly time frame at each of these levels, a lot of consolidation, you know, wick rejections and everything like that. We come back, grab that volume and continue pushing down. We come back up, we tap into this little area where the fake outs have happened, created a resistance, and then a nice sell-off. This week, we started off with a little gap in between. Gaps are always going to get filled, whether it be a wick rejection or anything like that, but gaps tend to get filled. When you look at the past gaps, as you guys can see, they have been filled, whether it's a wick rejection, candle closes, anything like that. So what I want to see is, can price come back down and tap into these areas where we have seen some uncertainty, reject this, and then continue pushing back up, eventually to come back and show some corrective moves into this zone, to come back and fill the gap and then continue pushing back down there. That essentially is going to look like, we've already have a break of structure here, but that essentially is going to look like lower highs being formed, lower highs and lower lows. So we've had a nice sell-off the last 3 weeks or so. I want to see price push back down here, come back, reject into this area, and then continue pushing down even further. Drop down to the daily time frame. So same thing here on the daily time frame, we have a nice gap. Last daily candle closed below 3,600 here. Fill the previous bottom wick rejection right here. What I want to see with the current daily candle is, can we continue pushing back up after rejecting this? Or if we continue pushing down, I want to see if price can break below this 3,600 area, and then we can look for continued sells coming back down into this zone right about here. So into 30,000, around 29,500 area. So that's pretty much the zone that I'm targeting. You come down to the 4-hour time frame, we have a nice little break and retest, previous 4-hour close with a bottom wick rejection, a lot of bearish volume. So can we continue that volume and continue pushing down? And again, you want to be very careful going towards Wednesday. There is going to be a lot of uncertainty. There is going to be a lot of consolidation, things like that. So don't let that get to you. Be very patient with your trade opportunities. So here on the 1 hour, it is a little bit messy where you have some consolidation with rejections and everything like that, but we are in a downtrend. Price did hold on to a support, push back up. It seems like grab some volume from this area. How do I know it's volume? Because we have a lot of wick rejections here, resistance being formed, and then a nice sell-off, right? Creating a new low. We push right back up here. The previous hourly closed like a doji. And then the new hourly already made a top wick, broke the previous low, and continues to push down. So I would say wait for price to continue pushing below this 3,600, 3,500 area, and then continue pushing down, and you can look for your sell opportunities. With that being said, I hope you guys have a great week. I will see you guys for the Wednesday live sessions. Stefanos is going to be here as well. If you guys have any questions for me or Stefanos, feel free to reach out to us on Instagram. For myself, it's at SharmaFX. For Stefanos, it's StefanosFX28. If you guys have any questions at all about trading or psychology, risk management, whatever it may be, feel free to reach out, and we'll be more than happy to help you guys out. So be safe in the markets, be patient. This week is not the week to just take trades, over trade, over risk, or anything like that. Just be very patient.